We're continuing with our coverage here at Metals, Minerals in New York, and joining me now is Rick Rule. He runs the U.S. wing for Sprott Assets. Rick, good to be back with you.
Danielle, it's a pleasure. Thank you.
Well, Rick, you're a keynote speaker here, and we'll get into your discussion in a bit. But first, last time we spoke, you were saying, look, it's a buying opportunity for me in regards to gold and the mining stocks. How do you see it set up now? Is it still a buying opportunity?
Yes, it is. I mean, the market is ubiquitously up across most categories in precious metals and the precious metal stocks. The recent retrenchment we've seen is normal backing and filling that one would expect in a bull market. Our suspicion is that for the next 18 months we'll be in recovery, meaning that we'll have higher highs and higher lows, but there will be enough volatility to scare most speculators a lot in the next 18 months, which means lots of opportunities for professional investors like ourselves.
So Rick, what was your message to investors this morning?
About the same thing. The nature of resource speculation is that you're either a contrarian or you're a victim. These are very, very volatile markets, and they're very, very cyclical markets. The market that we're talking about, the market for junior resource stocks, represented by the TSXV, is off about 75% in nominal terms over 4 years. In the quest for physical goods, if you were going to buy this beautiful dress, if it was on sale for 75% off, you'd call it a sale. But investors call it a bear market. They're the same things. That's my message.
So on the topic of gold forecasts, Rick, I know you've been vocal in regards to the forecast put out by the banks, i.e. Goldman Sachs, and you've criticized them for being repeatedly wrong. Now, do you care about these forecasts? Or why are you so adamantly against them? Do you think they cause harm to the industry?
Well, they're useful to me, but you have to understand them for what they are. And I don't mean to point out just Goldman Sachs. The question was asked to me in the context of Goldman Sachs. I find most of the big banks' forecasts to be equally wrong. They would seem to take trends that were in motion and extrapolate them by computer ad infinitum. And so when the gold price was at $1,800 and $1,900 and the narrative in favor of gold was very positive, the banks extrapolated that trend to infinity, up. Now that the narrative has changed and the price action has been down, they've done the same thing, the opposite way. The nature of what they seem to do is take the narrative in the context of momentum and extrapolate it, which isn't useful. The truth is that what commodity markets do is they swing from overbought to oversold. And it would seem like the big banks continue long an oversold market and continue to sell an oversold market.
So let's look at the narrative of the Fed now, speaking about narratives. What do you think of the recent monetary policy decisions taken by Yellen, Rick?
I think they're positive. I think Ms. Yellen is probably a pretty good person. What bothers me about Ms. Yellen is she's never had a job. She's never had to do anything like make a payroll like you might have done at Kitco. All she's ever done is done academic studies. Specifically, the tapering is a good thing, but the idea that she has tapered because it's good economic policy is ridiculous. She has tapered because they increase taxes on the rich. They have stolen more money, which means that their deficit is smaller. She has tapered because she is able to. We've talked about this on your show before, Daniela. Quantitative easing is counterfeiting. It's printing money. She has to counterfeit less because she is stealing more. If you think that stealing is good and counterfeiting is bad, then you're happy with what she's done. I don't see any qualitative difference between stealing through counterfeiting or stealing directly, which is what she's doing.
Do you think it's going to be good news for gold?
I think irrespective of what she does, the news will be good for gold. I don't think ultimately that even the Fed can overwhelm a market over time. Markets always win out, just not always quickly.
Did you read Flash Boys, by the way?
I have not read it yet, but the young man whose name escapes me from the Royal Bank, the RBC guy, used to be our trader. He's a very, very, very smart guy, so I'm looking forward to reading it.
All right. Well, Rick, before I let you go, I know you like gold and the mining stocks. What else do you like these days?
In precious metals, I particularly like platinum and palladium. The gold and silver thesis holds true for them, but there are supply and demand fundamentals of their own, which I like a lot. Looking in the longer term, this may take 3 or 4 years to play out, but I love the uranium business. The last time the uranium was set up like this was the year 2000, and it made me personally an awful lot of money, something I look forward to again. And for investors of yours in the west and southwest of the United States, don't forget water. Water's been free for a century, and that party has come to a screeching halt.
The new gold.
Absolutely.
Rick Rule, thank you so much for being with us.
Thanks for the opportunity, Daniela.
And thanks for watching our coverage here at the Metals and Minerals Show in New York. We'll have more for you. In the meantime, you can email us, newsfeedback@kitco.com. Thanks for watching.